So now let's look at Bitcoin. So first thing to know is that it is indicated that we are still in a bull market. So this is the 49-day moving average in blue, highlighted in area. So when we dip underneath this surface line into the blue waters, we are sinking, and we are in the bear market. So that is indication in past cycles. It is highly popularized as the indicator that we are in the bull market because we are still supported in trading above these lines, okay? Now the green and red and yellow, that is Bollinger Bands, just kind of indicates where we're trading, down or up. And we are tightening up right now. I have a theory about where we are in the cycle as compared to previous cycle, and where we are headed, so stay tuned for that. But first I want to just show you another indicator that we are still in the bull market. I'm just going to switch over to the day interval to show this because it does look better under the day, in my opinion here, and that is the M2 global money supply. So there's a high correlation with Bitcoin and the M2 money supply. As you can see here, I have it on the 78-day offset. Now there is a better correlation as you go a little bit higher, but when we're in peaks, it does appear that the 78-day cycle, or the 78-day offset, indicates when we're going to see our highest highs. So as you can see here, we hit our peak right there at 78, and here we hit our peak really close, really close. So it's kind of an indication of, when is the true bull rally over? Are you going to get any higher highs than that? It's really going to indicate based on this chart. And these numbers here, I can click and drag this up and down, so it's not really an indicator of where it's going to end up exactly. It just kind of indicates we are up or we are down, and we are going to reach a high and we are going to reach a low. So it's not going to tell us exactly where the price is going to go. It's only going to tell us that we are kind of going up or we are going down. And as we can see, we are holding true to the correlation for this M2 still today. And it is most likely that we are going to continue to hold through, though we are flatlining on the M2 money supply right now. And it looks like we're probably going to be waiting a bit, especially for rate cuts, things like that. And I think the rate cuts are actually going to be the most driving factor of the market moving forward, and we're going to want to look out for that. I'm going to go back to the 1 week interval, and we're just going to look at the 14-day moving average. And the reason why I want to do that is just to kind of explain where I think we are in this cycle. So as you can see here in the last cycle, when we jumped up and then we hit our peak, and then we quickly dived underneath the 2 week moving average, right? And then we hopped out of that and we skipped, and then we jumped back into the moving average and hit the bull and the bear market. So kind of think that is where we are looking at right now. If we look at here, this, I don't think we can really consider this part of the rally. I think this is a pre-rally to the rally, if we can say that. We have a lot of consolidation here, a lot of tightening of the Bollinger Bands. We have a lot of support around the 2 week moving average. We're just really maintaining our buoyancy here, and really finding a new support. And that is not something that we did in the past, except when we rose around here from the 3,000 point, right? Back to the basically the highs of the previous cycle. And so I think this is a correction for this, because this is like fair value, and this is the correction, or this is everyone selling out, and then we have a correction. And then we find new support, and now we're on the rally. So this is where I think we are. We hit this first point, and we dipped under, and then we whoop, and then we're buoyant. So, a piece of wood, what happens when you throw it under the water? It bounces right back up. And that is what it looks like we're going to do. So if we are right here, we're likely going to round out a bit until we touch this average again, and then we're going to hit off again. Now I do think we are going to take the dip down and then jump up, and I think this jump up for us is going to be a lot stronger supported than this one. It just feels like this is a lot shakier, because this is retail. This is a retail buy and sell, and this is max panic, max fear, max greed. When we look at institutional, they are a lot more tight on their decision making. They're not freaking out at every little thing, because they have to maintain a strategy and security and business. So I believe that we are hitting this point right here, and we are going to level out. I think it's supported by, if we look at rate cuts, it is very unlikely that we are cutting on May 7th. So I think on May 7th, it's just really going to lose a little bit of steam, and we are going to just kind of fall a little bit until we hit this support line again, the moving average, the 14-day moving average, and then we're going to jump off. Now, what is the worst case scenario? The worst case scenario is we enter a bear market, or you didn't trade out in time. Go ahead and look at the 196-day average here. Now, this is really going to give us our levels of support. So where does Bitcoin have its true support, where it falls down to, where it's going to end up after the bear market? So this is kind of indicating your potential rebuy-in price at the bear market, or the price you have to suffer if you don't sell out during the bull market, right? So as we can see here, it's not a perfect. You're not going to stay on that line perfectly. You're going to dip underneath it. You're going to go over it. Here, you really just touched it and stayed above it, dipped down into it. But this is indicating our lowest support, really, for Bitcoin. And so once we hit the bear market, once we finally do, and we start going down, these are our new levels of support. So your likelihood of getting another $20,000 Bitcoin, another $3,000 Bitcoin, yeah, right, another $25,000 Bitcoin, those chances are really slim. We would have to dip under this support quite heavily. And without the retail market swinging things as widely as they could in the past, I don't believe you are ever going to see another $20,000 Bitcoin. I believe those days are dead. You can, however, get potentially $50,000 Bitcoin. I think, as you can see, this is trending upwards. And so by the time the bear market hits, which is going to be a little bit higher than this, our support is going to be maybe maybe a little higher than $50,000 Bitcoin. That's your next potential buy-in price at the lowest price you're ever going to get, right? Now, of course, we can dip under that, and how low? Maybe you can get a 35K Bitcoin. Maybe you can get a 40K Bitcoin, but I think, straight shots right now, before the market has realized itself and we can look at the new data, right now it is looking like you're probably going to get the lowest you can get at a $50,000 Bitcoin now. that is premium price. I would sell the house. Not financial advice. I would sell the house and buy all the Bitcoin at 50K. Okay, so that is kind of indicating where we are going and where we're headed and where I think we are. So again, if you missed it, I do believe for the time being, we are going to kind of just edge out. Kind of just keep our support line and lose a little steam, lose a little trading volatility or whatever. Just gonna be... yeah, it's not very helpful, is it? Anyways, it is just going to be a little bit of carry on this line here as we dip down. I think potentially all the way into June. And I said, the rate cuts are going to be the biggest driver of the market. And if we don't get rate cuts in May, which it's projected that we aren't going to. I don't know if we are or not. I don't know if the projections are good or not. I don't know if people are lying to us or not. People are probably lying to us all the time. So you have to take everything with like a grain of salt, right? So, if we get our rate cuts in May, get ready, because that is a catalyst. That is the catalyst. And if we get them in May, we are having a really long and fruitful bull run potentially this year. If we don't get them in May, like I said, I believe we are kind of just edging out, and then we're going to kind of come down, and we're going to touch this line. And the line's going to come down a bit based on this data here, because this is going to cut out of the moving average moving forward. And we are just going to have the moving average come down a little bit, so our support line will come down a little bit, maybe like 90K. 90K might be our next low, thereabouts. If I turn on the fib supports here, yeah, it shows that we have like a strong support at 80K. I don't think we get back down to 80K levels, though. I really do not. I think that our next low is about 90, a little bit above 90K. I think there's going to be a lot of people hoping to buy in at 90K, but the market doesn't hit there, and so you get a lot of FOMO of people market buying before it goes up, right? Oh, I can't get my buy-in at 90. Buy, oh crap, the price is getting out, so I gotta buy. I think that's how the market's going to go, and then we're going to hit our next rally point, especially into June, and then the June catalyst of rate cuts are really going to send us soaring, and I don't really know what we can expect on where we end up. I think, it's very clear that 125 to about 140 is a good support line for Bitcoin to end up in the next hike. But we're going to hit a lot of resistance at 100K, and so, that's kind of what we've been doing. We've been having the resistance from 95 to 100, and so it's kind of hard to tell where we're going to kind of stall between those points, but I do believe that 140 to 125 is our next top, our next real top, and then we'll just have to see what happens then, because there's potentially a lot of rate cuts going through the year. There's potentially a lot of injection into the market. We could just rally all the way into 2026, potentially. I would be looking strongly at June, July, August. Those are the months that I am strongly looking at. Okay. So that's Bitcoin. Let's go ahead and look at Fartcoin. God damn it! Damn it! It's happening again. It's always I can't look at Fartcoin ever because of this damn moon. This fucking moon is always in the way!